Hey everybody, this is a review on Alpine Income Property Trust stock ticker PINE. When I actually did a deep dive on this, the price could absolutely be different by the time you watch this. It is $14.58 a share. So we broke down all of their information, including from their 10Qs, all of the necessary 6K updates, and any other SEC available documents from the timeline of the 10Q up. Currently, they have around $6.1 million cash on hand. Mind you, this is trading at almost $14.58 a share, but per share, they only look at roughly around 40 cents per share. So we're already a huge difference between that. They do have some restricted cash of around $5.4 million, equaling out to it in total is $11.57 million total cash on hand. So that's 73 cents per share. Now, their long-term debt currently is $357 million, meaning that when you add up all of the debt collectively together, that is $22.52 worth of debt in a full, aggregate. So their net debt is going to be $345 million. Now, normally this isn't a problem, but let's see what the inside of the company looks like. Their operating cash flow right now is going to be $7.9 million just for quarter one of 2025. Their annual run rate is $31.6 million. Okay, let's see here. They also pay out a dividend. Common dividend needed is going to be $16.7 million of that money is re-given out into shareholders unless they choose to cancel said debt. The residual cash after the dividends is $11.5 million. Let's see. So their interest is covered. That's fine on that end. They're actually around 12.2x on their total net debt / their EBITDA. That's a big problem. Also, they have near-term maturities. They have $100 million due next year in 2026. They have $257 million in 2027. This is a high refinance, operation that's going on. If they can't manage to do that, they are in big trouble, ladies and gentlemen. Big trouble. So right now, let's see. So something that I want to mention is right now what's priced in at around $14.58 is going to be a EV/EBITDA of around 11.4x. This is a discount compared to their other peers. So these are companies that are either doing better, don't have debt maturity coming up. Each and every group stock in this is different, but they have an average of 15x. So as we said before, realistically, they're going to be short $70 million next year, and they're going to be short $236 million. Both need to get refinanced. They're both back-to-back, so it would have to be a large package. If they are able, let's just say, the cash flow maintained to be the same, dividends were the same, there was no burn, there was no anything crazy, they were able to refinance. When we're looking at 2028 moving forward, they could theoretically look to service that debt over the long term. But that is what you guys are betting on with this asset. So with that being said, though, over the last quarters, let me see here. So right now we have an average swing of a quarter to quarter of around 6.9%. But it's actually been positive, meaning that from quarter 2 of 2024 was 5.2%, quarter 3 of 2024 was 4.5%, quarter 4 of 2024 was another 4%, and quarter 1 of 2025 was a 14%, up within terms of their revenue. So with that being said, though, what is the full and total opinion of me on this? It is going to be avoid. To me, I'm not interested in betting on that. I think that at the end of the day, they're roughly around 14% undervalued. We have a fair market value on this of around $17, so the debt was even beyond what the actual book is theoretically worth. If you are someone who actually wants to challenge the status quo and actually then believe that this company will refinance, you're looking for a buy price under $15 a share. Anything below that, if you believe it'll refinance, would technically make a lot of sense.